Ajeet, hi, it's good to have you with us.
Phenomenal being here. Thanks for having me.
Ajeet, you've been somebody who's been right at the start or involved with the Indian startup ecosystem, right? You've been one of the key architects of the ecosystem, the technology ecosystem, the startup ecosystem in India, right? And you've really seen it evolve. It'll be lovely before we dive into the topic today, right? Which is very, very important for a lot of founders and startups to understand. I would love you to run us through some of the exceptional work that you've done.
So thanks for calling me an architect or all the kind words that you said. I personally think they're very undeserved, but I will accept them because there is no praise which is as much fun as undeserved praise. So thank you for that. But I'll give you a little bit of a rundown.
Yeah.
So I've been an entrepreneur twice. Once between 1994 and 2000. Second time between 2004 and 2010.
Right.
I did my first angel investment, a proper angel investment in the year 1998, January 1998. This was a .com called Padai.com at the boom of, the .com boom.
Right.
Three very qualified people, all three from IITs and those kind of things, gave up very lucrative jobs in the banking and brokerage sector and set up a edtech startup called Padai.com. So that was my first angel investment. And subsequent to that, over the next, all the way up to 2010, I made on an average of roughly one investment a year. But this was not done in the format of, the Silicon Valley model of angel investing.
Right.
Because first of all, it didn't really exist then. And second thing is, these were always people who knew me and I knew them with a 1 degree of separation at most.
Right.
And usually I would be the only angel investor, and the plan would be to never raise money again, as in my money would seed them so that they would never have to raise money again. So a much different model than what we really recognize today.
Sure.
In my first venture, I exited Intel through its capital arm. Intel Capital was entering India, and they funded a company which started looking like an education asset holding company, which invested into me. I was their first investment. And by investing, I mean they actually acquired me 100%. Right, as in they merged it with the parent company.
Right.
In my second venture, I raised some investment, and that did not go phenomenally well. Let's put it that way.
Okay.
Around 2010, when I got out of both of my second venture, also I became a full-time angel investor for a period of roughly 4 years.
Okay.
And then in September of 14, I took up my life's first job.
Okay.
I'm wondering if I'm losing some of. It was probably September of 14. I got employed for the first time. So I've never had a job before that.
Right.
I joined IIT Bombay as the CEO of their business incubator called Sign.
Sure.
Subsequent to that, I joined a Hong Kong-based venture development firm, which then morphed into a crypto firm and launched a token called US.
Okay.
I then went to Kalari Capital, which was top 10 VC firm in India.
Right.
And finally, I joined the Blockchain and Cryptocurrency Committee as its head, and moved on to become CEO of one of the member companies called ZepPay. That relocated me to Singapore. And then I came back about a year ago in anticipation for being in India for 2-3 months while this virus blows over.
Right.
It's been 13 months and the virus has not blown over, but we are still here. All along, I have worked with basically every incubator, accelerator, etc. that is in India. I'm currently venture partner with Blockchain Founders Fund. I am a mentor with SOSV. I'm a resident mentor with 500 startups and a whole host of other such affiliations with startups, aggregators, as well as funds. So I have been in this space since forever. Have dabbled in just a lot of these things. Can't keep listing them. My total number of investments in India would be a little over 30. And why I'm not giving you the exact number is because in my calculations, if I invest again in the same startup, I actually calculate that as a second investment because it's an independent decision.
Right.
I do participate in global startups, predominantly US startups, but those I end up participating through syndicates and not directly because, I don't have that much opportunity to visit them, sit with them, do individual calls. So if you count those investments also, then that would be another somewhere between 100 to 150 startups, but usually in some sort of syndicate pools, etc.
Right.
So that is roughly where I am. Have had some very interesting and exciting exits, which are obviously negligible in number. but they give me a positive portfolio return nonetheless. Nothing exciting, as in I'm not on the Forbes 100 richest people, even in I'm sure that, so I'm in a place called Powai in Mumbai. I was thinking that if Forbes made 100 richest people in Powai, I would not even be in that list. As in, they would really have to come up to 100 people in my apartment, and frankly, there are only 4 of us, so I'll probably be the richest because my wife and my kids probably have lesser money than I do. Having said this, so it's been fun. I've enjoyed the entirely electrifying experience of being with founders, having been a founder twice myself. Coincidentally, both times for 6.5 years each, thereby totaling. So, of the 28 odd years of my career, 13 years were spent as entrepreneur, and the 4.5 years as an employed person. So that takes care of 17.5. So the remaining, 10.5 in a variety of capacities, in a variety of roles.
Interesting, Ajit. Interesting, and on that front where you said, of the Forbes 100 bit, it's very easy, right? I think media companies can go on to construct a lot of that. It's not a difficult task, right? I think you just have to sort of raise your hand and say that.
No, you are really referring to the Forbes 30 under 30, which is based on ethereal criteria. I think the Forbes richest 100 actually is based on some sort of net worth calculation. So it might not be very easy in that case.
well, yes. Ajit, 2020 has been a very unreal year for all of us, right? I think, while there have been, and 2021 actually is a little scarier, right, with what is happening. While all of that has happened, right, business must go on, while we continue sort of, have our sensitivities, towards the people who've been hit, it's important to discuss business, right? I think what 2020 has done is that everything that was set on or set out in the last 100 years has been disrupted, right, in a very significant way. But what has also changed is our consumption for tech, right? Our appetite has gone 20x, right? A country which is like India, so fragmented, right? For a period of 2.5, 3 months, right? Everybody was essentially glued on to one medium of engagement, right? Which was either your phone or your laptop or your television, right? But it was essentially extremely limited ecosystem, right? That sort of made us a very homogeneous being, right? What do you think? Is this something that do you view it in that sense? Do you think that homogeneity is going to last? What has 2020 left us with?
So there are 3 dimensions. The most popular and easily seen dimension is what you have said. Right. That tech consumption, whether it is work from home related tech, whether it is gaming, whether it is entertainment, whether it is education tech. These were all trends that existed pre-COVID. Right? As in Netflix existed pre-COVID. A lot of the ed tech startups existed pre-COVID. So what happened is that there was a dramatic acceleration. Right? And this, because it affected every one of us, people are working from home, students are studying from home, became very obvious. But there are some things that did not become as obvious. I'll give you an example. See, when you are consuming tech, I'm not calling it using tech because there's a consumer end and there's a provider end. When you're consuming tech, you are still a passive consumer. For instance, I could go to a class to learn singing, or I could do it over Zoom, right? I think that people started creating tech, as in the opposite of consuming tech. For example, every one of us, at least in the metro cities, and probably this is true in other cities also, I'm just not aware, have many friends who started preparing food at home and selling it online. Mm-hmm. So we all have friends who say, hey, you know what, I'm now cooking this, or I'm selling this, or I'm doing something. Now, I think that probably in my head, while it is not as widespread a phenomenon as the consumption of tech, but it's actually more of a turning point. People started exploring not just how to do things more efficiently, such as consuming education through tech, but also what else they can do with their lives. So a lot of women who, were now suddenly not having support for cooking, started cooking themselves and did home kitchens. A lot of people who started spending time on Instagram started selling salwar kameez or kurtis on Instagram. And the number of such stories grew explosively. It's difficult to put a number to it, but the proportion to it, but I think at least 25x.
Correct.
So this is the unheard of phenomenon, which a lot of people miss, because what this does is that, see, the consumers in India are going to be crores, right? Tens of millions.
Sure.
But the producers for those consumers is obviously going to be a fraction of that.
Right.
When the producers increase a 25x, it is probably like, as big a phenomenon as the consumers having increased 25x, because with a lag, that is also what will happen. Right? So I think that was a second phenomenon. The third phenomenon, I think, when you combine both of first and second, is that while we have seen behavior change, have we now become a new species, or are we just holding our breath? For example, when work from home started, a lot of companies said, this makes so much sense. Some companies announced we always work from home. But though that started towards the end of March, beginning of April of 20, by around September, October, a lot of people started opening up their office. The lockdowns were relaxed almost completely. Employees just did not want to work from home in several situations. So that says that we didn't change. We temporarily changed. Having said that, there must be some residual effect of that change. Maybe we are doing video conferences far more. Right? So that is, I think, a given. As in that, I don't think is changing. But to what extent have we changed? When schools, colleges, tuition classes open up, then will we see a dip in education technology? Those are the things that one has to take a view on and develop a vision on. Right? Some people are thinking that the world has changed forever. Right? I think that is too far-fetched. Some people are thinking that once this virus situation goes away, everything will go back to how it used to be earlier. I think that is as unrealistic as the former. So we are left with the fact that some amount of change has become permanent, and we are all taking bets as to, is it like 1%, 10%, 30%, depending on the context, depending on whether it's education, depending on whether it's work from home, the percentages would change, but we are all taking bets there.
Very interesting. But do you think, there is a huge conversation that is going around, the second wave and now the third wave, right? Not just in India, but I think globally, right? I was speaking with somebody, in Japan, and they are preparing for the fourth wave, right? Or, Europe again is under tremendous amount of pressure, while they wanted to open it up for summers, but, they're scared with the third wave. So there's this complexity, right? But do you think we are moving towards, like you said, right? That perpetuity of work from home or working digitally becoming a significant part of our lives, right? Or digital interaction becoming a significant part of our life?
I think that there is a significant population. By significant, I probably mean 1%. Which has the choice of working from home or not. This also tends to be the most affluent part of our economy, such as bankers, you, me, etc. This also tends to be people with the means to have devices, connections, space at home, etc. This gives a very disproportionate view about work from home and its impact. For instance, almost all manufacturing activity requires a lot of on-site work. There's a lot of things that require people to necessarily be present at the place, where work from home or work from remote is not a choice. So we are restricting ourselves to those opportunities where work from home is a choice. Right. So now, having understood that this is only 1% of the country, but probably the most highly consuming, the most affluent 1%, right?
Sure.
Now, see, what happened is that when people were going to office till sometime in March of 20, and in April of 20, they were working from home, and a lot of people were asking them, how's it going, including the bosses and the entrepreneurs or whatever. People largely said that, what? Some people said productivity is more or less the same. Some even went so far as to say productivity has gone up because of the way they were computing productivity in terms of transit time, commute time, etc. But you move to around September. One of the interesting differences between April, which was work from home, and September, which was work from home, is that in April, the same people were part of your team as there were in March, when you were not working, when you were working from location, office location, right? So cultural issues, interpersonal issues, human issues did not come up because, it was the same. Pretty much like if you and I are friends, whether we are meeting in a coffee shop or we are talking on the phone, we feel the same way about each other. But as time passed, there was an attrition, some people left, some new people came in. Now, these new people did not have the same human equations, the personal equity with the older people. And that had started having a tremendous influence on the culture. Right? People try to solve it in a variety of ways, but nothing similar to what you would do when everybody was physically in the same location. And I do believe that several people started noticing some drops, even significant drops in how good they were feeling about their work. That would probably manifest in their, it will manifest in the productivity also, longevity, loyalty, attachment to their colleagues and their workplace, etc. So I think that while we have accommodated it, work from home is going to just be far more prevalent than before. But that is like not saying much, because earlier it was close to zero. Like if you look at people who are employed, not looking at freelancers or self-employed, who probably their home was their workplace. But if you look at employees, I don't know what the proportion of work from home was. I'm sure it was much less than 1%. Right. So if it was 0.1% or something like that, I don't have the exact numbers. If it goes up to like 2, 3, 4%, it is a lot. It's like 20, 30, 40, 50 times more. But if you still compare it with the 100, I am not sure that when there is no need to work from home, what proportion of people will still work from home. It's going to be like 20, 30 times more than before, but it'll still probably end up being 2, 3%.
Interesting. And while you say that, and while we're sort of talking about work from home and and the luxury of say work from home, or resetting in our own ways, right? In my mind, I'm actually sort of thinking, right, that we should have actually touched upon how technology intervention is going to change life, right? And I think there possibly we would have covered manufacturing and other things. And I think that is a question that we'll cover possibly towards towards the later half conversation, right? Ajeet, you've been very actively advising and investing in companies, right? Individually and institutionally, right? EduTech saw a lot of very clearly visible jump, right? A lot of money sort of immediately got pumped in to EduTech as a sector, right? And it was an outlier. A bunch of other things also sort of saw a rub off. For example, digital tools which help you, for example, in AirMeet and Zoom versions of by Indian founders, right? What are some of the sectors that you've been impressed with, right? I mean, with this change now, right? What are some of the sectors that you've been impressed with, right? What do you think is going to last, beyond these times? The consistency of utilization is going to last beyond these times.
So let us look at the drivers of what causes them to last. There are two drivers. One, an example here would be EduTech, where a lot of participants who consume the output might actually prefer non-tech based solutions. Like, I've always said that if a teacher was on quality of 4 out of 10, but stood in front of you with a blackboard and a chalk, versus another teacher who was a 9 out of 10, but you were watching a recorded video on YouTube, most parents would be willing to pay much more for that in-person training. Right, which was for a 4 out of 10 with a chalk, as in probably close to all parents. So, despite that, given how much India desires education and how much of population we have, clearly everything just scaled up. I think you have to get educated, right? So everything just scales up, and at a certain point of scale, you may reach a tipping point where those scaled up entities would remain fairly large. How large will they go down a little, etc., is not so important. So I think one of the huge drivers of this survival of the change of how we live is that if sectors can grow a lot, I think that is one driver. The second driver is, if I may just explain it with the help of a example, IRCTC. So when online railway booking started, what did we do before that? We would show up to the railway ticket booking counters 3 months before our proposed train journey, because the tickets for any given date would start getting sold 3 months before. We would show up there hours before the ticket counter would open and still hope that by the time your number comes to reach the counter has not shut. Right? So, despite this, when IRCTC came up with its extraordinarily unfriendly user interface to book a ticket, I think the back end was pretty robust, to be honest, but the front end was like, you don't know what is happening, right? So when they came up with that, for a fairly long time, people did not want to do it, right? First, they would still want to queue up. Second, they started going to what were called cyber cafes, which I have not seen too many of now, which would say train bookings done here. right? Sometimes they would also say PAN card application done here, whatever, some services and utilities. So you would go there and that guy would go click, 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 because he had understood the interface and probably get you a ticket. Now that has changed and most people are doing it by themselves. Of course, for the last 1 year, it has been absent. What caused the change? Actually, if you somehow forced somebody to go through the process of booking a railway ticket online, and they actually got the ticket, they would never ever want to stand in a ticket counter again, despite the way the IRCTC was not as friendly as it should have been. The same way, the COVID virus situation is forcing us to do some things which may have been sensible, but we would not want to do it out of sheer habit. Now, if these things that we are forced into, such as an example, buying apparel online, like while Mintras and Jabongs and what have you were selling apparel for the longest time and they had reasonable volumes, but in terms of market penetration, as to how many people are buying online, the numbers were negligible, as is the case in many sectors of the tech economy of India. But because of this work lockdown and stuff, a lot of people have explored home delivery of apparel, home delivery of groceries, home delivery of food, etc. And when they did it, they realized, you know what, this is not so bad. This is not so bad. People bought washing machines and dishwashing machines online, which they otherwise would want to go and probably see a demo of, etc. So those things which are inherently superior to do with tech, except for habit, which was not allowing it, I think that those would also be things they would survive. So two things. One is whether inherently superior. Like, for example, I'm not convinced that ed tech is necessarily superior to having a teacher in front of you. In fact, I think a teacher in front of you is better, except not scalable, right? So those things that will cause phenomenal scale, I think they will survive. And those things which are inherently superior regardless of scale, such as food delivery, grocery delivery, etc., I think they will survive.
Ajit, I think that's a fantastic thesis, right? I mean, honestly, I think I kind of completely resonate with a lot of what you're saying, right? And it's just so much more logical, right? The way you put it. Which are some of the sectors that you excited about, right? Given where we are right now.
Okay. So actually, it's going to be quite a mishmash. So don't expect a consistent thread of logic behind it. So I think that EdTech continues to.
I think every sector, every sector has a lot of micro possibilities and micro complexities, right? So I completely understand where you're coming from. Just
So EdTech, but I must tell you that EdTech to me, I personally think that the model that, if I'll just take a step back, way in the late 80s and early 90s, when I was a student of computer engineering, by the way, the personal computer, which would commonly be called IBM PC, it was not if it was branded IBM, but we would all call it IBM PC. So the personal computer made its appearance in offices for the first time, and then also in some people's homes, such as mine. And if we look at what all of the people are doing, and I remove Flight Simulator, which was a very popular game that we would play on it, if we ignore that, largely people are using it for word processing. Some people, so that there was a software called WordStar. We were using it as for Excel, my spreadsheet, because it was not Excel, it was Lotus 123. And a lot of people were using it for financial accounting, which means basically we were doing the same thing that we were doing offline. Now we were doing it online, right? We were just doing it in an automated way. I think that EdTech, in many ways, is just doing that. It was doing the same lectures, done the same way, except use tech, use some adaptability, some customization. I think that in terms of the capability of EdTech, we are at the first trickle of what should be a tsunami. I'm very happy with the direction in which we are heading, but I'm quite unhappy with how far we have reached. I think that this is not going to last. Whether the incumbent players will evolve and do the great education that I would like to see happening, or whether there will be new players, is besides the point. That is not my problem. But I think that EdTech has a lot of room to innovate. The second area that I see getting interesting is where natural resources are coming to an end. So while water is something that will start interesting me in some more time, I don't know. I've been saying that for 5 years. I don't know how many more years it will take, but I think that fossil fuel, electric, is getting to be very, very interesting. So I think that electric vehicles, etc., mobility, etc., I think is very interesting, and all associated spaces with it. Then battery charging stations, all of those, right? Optimizations, etc. Associated with that, and So I'm like 51 years old, but I've seen nothing like, this health crisis that we have seen.
Right.
So this entire industry around wellness,
Mm-hmm.
and I don't mean the more touchy-feely end of it. I mean, the food, the nutrition, the mental health, etc.
Right.
I think that while the micro opportunities are all very small compared to, let's say, NetTech, but the sum total of that is very, very big. So D2C, like direct to home, direct to consumer, I think a lot of things will get DTC, which otherwise were not DTC.
Right.
That is also a very interesting space. I think that this entire room for fintech is going to be absolutely like a mind-blowing thing. And this is coming not just from the fact that we are working remotely, but also the fact that the biggest players, and I'll, for obvious reasons, desist from naming them. I think they are doing an extraordinarily shoddy job, to the point that I feel it's almost abusive to the customer to be their customer, except that they are monopolists, right? So I would hope that some of the user experience and customer friendliness and purchase process optimizations, etc., that have been seen in other areas of tech would also come into finance and make things easier for us. I've already seen enough of that happening. I think that the entire move around, like, let's say the Star Trek end of innovation, which is, like, wow, that's going to change human existence. You would expect me to say artificial intelligence, and that is an area of interest for me. But I think that is coming from this entire move around decentralization. Right. So, for example, DeFi, decentralized finance, would be an example where we have, we have moved from being victims of one central large giant to another one. Right. The second one was a little better, but then they become so big so fast that they also treat us like a cog in the wheel. I think decentralization, if it occurs, would be great. Like, for example, imagine a Uber or an Ola, which is effectively a taxi hailing service, let's call it that. But where there is a driver, there is a rider, but there is no Uber or Ola. There is just an algorithm or a protocol, which is, by the way, not rent seeking. Right. And this can theoretically be done for the Amazons of the world. It can be done for all the banks of the world. Because ultimately what they do can be broken down into an algorithm. For example, try to reach a phone-based customer service of Uber or Ola. I have not managed it ever. Right? You can send in requests. That's a different matter. But if you think about everything that a bank does, ultimately you could write a program to do it. Right? You don't need these large halls, which we have physical locations, which we call banks. So I think that the decentralization and dematerialization is going to continue. Dematerialization is obvious because it has been proven again and again. But decentralization also is of extreme interest to me.
Very interesting.
That brings about the blockchain and crypto tokens and that end also.
Ajit, I'm just kind of taking a cue from what you're saying, right? How exciting are intersections, right? So, for example, there's a lot of work that I do in the agri-tech space, right? There's a lot of work that I'm doing in the insurance side of it. How do you value intersections, right? Intersections are becoming very, very interesting, right? Where companies which are not necessarily into, say, a fintech play, are entering that as a domain, right? What do you think about those intersections?
So what happens is that I think the intersections are looking like intersections only because they have traditionally existed as such. Just as an example, suppose you're a manufacturer of television sets, right? And you tell the customer that, hey, if it stops working in the next 1 year, I will replace it, as an example. So are we, in this example that I gave you, an intersection set of consumer electronics and insurance? Because if you think about it, the fact that you will replace it if it doesn't work sounds like some sort of a guarantee warranty / insurance. So actually sometimes it can be that traditionally these things have been different. I'll give you one more example before I actually take this thread forward. So you are a seller, you are an e-commerce player, right? And because you know that how consumers work, you say, you know what, I'll just give it to you on EMIs. Now suddenly you have become a fintech player and also an e-commerce player, or at least so it seems, right? Because you have become a lender, right? Now how you lend, whether off your balance sheet or whichever, besides the point, that's a business model. But what I'm saying is that suddenly it looks like you're a retailer as well as a financial player. The reason we see these things as intersections is because traditionally they have been under the purview of different categories of players, different industries. But going forward, as you create a tech platform, frankly, you realize that they are not really different. So we may call them intersection to view them in the traditional lens. That here's a company that's doing agriculture and insurance, or retail and and lending. But in reality, it is the same thing. You're fulfilling the needs of a consumer who wants to consume electronics a certain way. Right. So I think that these are more of redefinitions than they are of intersections. But yeah, in the traditional framework, you could call it intersection.
Interesting, right? But I think while you're also sort of saying this, in my mind, I'm thinking, right, that these are very strong enablers in the process, right? And they themselves are, they might be propellants for a evolved purchase ecosystem, right? Ajit, I'm gonna move on to my next question, right? Which is more specific to our conversation today, right? What are some of the matrices that you would look at while you're evaluating a business, right? What changes your view, right? And I think you've answered a part of this already, but what are some of the matrices that you use to evaluate a business in the current circumstance and beyond?
So what I'll do is, in evaluating a business, I will actually simplify that for myself by saying, evaluate a business for investment. The reason is, like, for example, if it's for a business plan competition, where I'm giving somebody a reward for what they've already done in the past, it would be a little different than if I'm doing an investment where I'm only concerned about what's going to happen in the future. So it's almost like X and 1 minus X. So I'm just simplifying your question to include how do you evaluate a business for investment. Okay, so that at least there's an objective. Now, so if you were to ask this to many investors, I think that the single most common first criteria that you would hear would be team. Right? I would agree that it is a very important factor, but I would probably put it at position number 2. I would say that position number 1 would be the market that they are trying to address. And I say this because I've come across so many teams, phenomenal people, but they just have chosen something which is, at least in my head, not the right thing to have focused their attention on. Right? I give an example of a team, 4 or 5 4 great entrepreneurs who decided to breed jellyfish and said that we will promote them as the next famous pet. And while I don't doubt their innovation, but I just don't see why, if they succeed even marginally, why everybody will not be able to sell it. There was nothing unique about their jellyfish. Right? So by the way, that's not a random example. That's a real example.
Oh, is it
somebody real example? Please keep in mind.
I thought of it as I thought of it as a funny anecdote, right?
It's not. That's what I'm trying to tell you. It actually happened, right?
Interesting.
And so I think that the market that people are trying to address, under the underlying characteristics of the market, and we discussed several underlyings, over the last 20-25 minutes. I think that is the starting point. Team is, of course, almost as important. So that would also be a very high criteria. But here is the thing. 2 different teams working in a nearly identical sector. One becomes Flipkart, one becomes Snapdeal. Right? As in almost exactly the same background. One becomes Ola, one becomes Taxi for sure. Right? People have forgotten Taxi for sure. Right? And there are just so many examples I could give. And I know a lot of these founders, so I don't want to speak of any of them in a derisive fashion. But what I'm trying to tell you is that often, other than the market, which is number 1, other than the team, which is close to number 1, probably number 2, I think that there are many other factors, such as who do they get on board? By who do they get on board, I mean, let's say, who are their earliest investors? Sometimes that can make the killer difference. Like if you got the right investors on day 1, this could make just so much of a difference going forward. That everything else being identical, you would have like worlds apart in terms of outcome. Right? It could be about how they chose to raise money, how they chose to speed up or not speed up, about how the market cycles affected them. Are they at the boom stage or the bust stage? About how the regulatory environment worked for them or against them. Right? So I think that there are all these factors which one has to take into cognizance, which is why when people send a pitch deck and said, what do you think? While it is possible to react, it is really like sending you a photograph of a mango and they say, would you like to eat this? right? As in, you get what I'm saying, right? As in, yes, you get some information by looking at the photograph of the mango, but to know that, it's ripe, to estimate what its size is in the absence of a frame of reference, to know anything more about it, you've got to interact with it a little deeper. So very simply, the market they address, the team, and my belief that these are the right people. So the first part is this the right problem to solve? The second part is are these the right people? The third part then that comes in, which I don't always use, but when I use it is as in the deal maker or breaker for me, is can I help them? Right. So which is why at the earliest part of this conversation, I told you that a lot of my US startup investments are through syndicating platforms where I'm not specifically helping the startup. In fact, there's a very good chance that while I might have been on an early conference call with the founder may not even know that they have me as an investor because it's part of a larger syndicate. As opposed to some of the other startups where I work much closer and I may actually make some key introductions. Including helping them close an investment round, get a major customer, help them open a new market, help them navigate through some compliance, regulatory or internationalization, globalization step, etc. So my belief in my ability to help the startup, if that is a factor, that's a phenomenal factor, as it's a really big factor.
But I'm sure the leading factor of making a choice of when you're investing, right, will continue to be how exciting the market is and how good the team is, right? And of course, how
so the market is phenomenal.
I think possibly once that is established, then this thing comes in, right? Saying that listen, I can help you, move you, I can help you move faster, right? I think it's
no doubt about it. You're absolutely right.
Ajit, market sizing is something which is one of the most talked about, right? And given the especially the VC ecosystem that we are all a part of, right? At the end of the day, an institutional investor is chasing a large market, right? And of course, that is largely because they have to cover up the costs that they're going to make in the process. They'll have to, there's an IRR for the risk that they're taking that they have to sort of provide to the LPs. Can you help me define market sizing better, right? Because this is something which a lot of founders go wrong on.
I'm so sorry. I managed to kick my own device. Okay, so you want to know what market size?
Yeah. Now, that's one of the most complex pieces, right? There's an immediate market. There's a market which is going to mature in some time, right? And then there's a market which is going to mature over a period of time, right? And of course, that really calls for a very different kind of a business model across all of these stages, right? It calls for a very different skill set also, right? But how do you define your market size, as an early stage company?
So, you have heard of those TAM, SAM, SOM, serviceable, addressable, total addressable, blah, blah, which is a very irritating page of any pitch deck, I must say, because it is wild with assumptions. Wild, as in by a factor of 10 at the very least. Having said that, one of the things that is probably not talked about enough is that all the gyan, all the learning, all the lessons, all the factors that we tend to talk about the most, market size being one of them, actually have come to us from what the Y Combinators and other such highly influential institutions in the Silicon Valley have taught us, to be honest. Right? So, for instance, market sizing for a Singapore startup and market sizing for an Indian startup are worlds apart. Right? Because in Singapore, unless they were really like a food and beverage business or a services business or a laundry business or whatever, where they would clearly be, in most likely they would be addressing a local market and market sizing is important, but otherwise they are really targeting the world. India has such a large population that even if, you are trying to develop a business such as one addressing all the credit card users in India, or the people who have shares in public markets, which would probably be like 1%, 2%, 3%, that category of population, it is still a large enough market to make a unicorn and $1 billion business. Right? So market sizing in India has to be seen a little differently than market sizing as we hear in other parts of the world. Having said that, there would always be issues. For example, suppose you want to get into the super luxury segment. Right? Suppose you want to sell like super luxury jewelry, gems, holidays, vehicles, etc. Then of course market size makes a very large difference. But otherwise, I think that market sizing is fundamentally around two questions. One is where we are, and second is where we are going to be. The where we are, I think in many cases, especially in the startups which are not fundamentally an IP-based startup, etc., is a very big segment, because frankly, where we will be, I don't know how much time it will take. But when you're looking at a fundamentally disruptive, like like a Walkman, for example, or fundamentally disruptive technology, then frankly, where we are just does not matter. Where we can take this is the only thing that matters. I'll give you an example. So I finished my computer engineering in the academic year 1990, 1991. And why I'm being so specific is that was the first year in which any engineering university in India actually offered artificial intelligence as a full subject, not just part of a subject, for the first time, right? So we were told that it was an elective subject. I did not take it, but some of my classmates did. And we were told that basically, now all things such as jobs and, lawyers and doctors and all of these they're all obsolete now. Now AI will come and change everything. Please note, in the year 1991, right? That life has changed forever. Everything has changed. Poetry will be written by robots, and there'll be no judges. There'll be robot judges and stuff, right? This is 1991. And we were like, oh my God, what's going to happen? And then we waited for years, decades, and nothing happened. And then last 2 years or 5 years, overnight, please note, we were waiting for it since 1991, but overnight, 25 years later, overnight, everything started moving very rapidly towards AI-based models, generative models, etc. So the problem with being radically innovative is that timelines are crazy. I mean, it could be really overnight, or be overnight 25 years later. So there one has to take a substantially different view. Right. So I think that on this market sizing, unless somebody said that, I'm going to change the way human existence works, where I would be fine saying, I'm not bothered about market size because everything will change. But unless that were the case, I would go with, where the market exists as of today.
Correct. So I think what I'm reading is in what you're saying is predictability is very important, right? I think what's visible is very, very important. You really cannot continue to really base your the call of making an investment or what's going to happen in future, right? Because it's just become so much more dynamic, right? And I think
unless you were SpaceX, unless you were Bitcoin, unless you were some of those which are saying, we are completely different.
No, I think also the fact, and I think also the fact that, who's leading them, right? So I think you go with a certain sense of conviction there as well, right? In that kind of a game. Ajeet, has homogeneity, which is what I sense and see, right, and influence in a certain way, brought in predictability in how the markets are going to behave? This is a follow-on question on the market sizing bit that I have. Given what has happened in 2020, our consumption, as I said earlier as well, is now really concentrated towards 2 or 3 mediums. Is there a certain predictability which is coming? Is this going to be a transparent ecosystem? Making calls is going to be easier?
So I think that regardless of whether it's a second wave of COVID, third wave of COVID, and waves of COVID, and why do waves occur, and why was it 200 years ago and today? Why do markets demonstrate bull phase and bear phase or necessarily, right? I think that there is a certain seasonality to this. We are currently all homogenizing because we all want to, let's say, all use the same telecommunication software, because if we are not all using either Zoom or Microsoft Teams or my Google Meets, we just wouldn't know how to talk to each other. If we are not all on WhatsApp, then even though we may find Telegram to be better or more functional, we will not be able to talk to each other. So there's a drive towards homogeneity because of the ease and the benefits of being one amongst many. However, like the examples I gave you, this comes in waves. I think that as you get increasingly homogeneous, the forces which show you the benefits of the heterogeneous or the opposite of homogeneous, I think become more and more powerful. And then we go through the next wave. So I think this is all waves and cycles. Some of these waves, like let's say business cycles for corporate earnings, are like something like a 7-year wave. Gold prices might have more longer wave, and some of the other things that we're talking about are still longer waves. That is all besides the point. But it is certainly a wave, and currently we are in the drive towards homogenization.
Wonderful. Nobody has put it better, Ajit, on this particular point. Ajit, how significant will traction be now, right? Or are we moving into a point where without a very large traction, startups and founders will still be able to raise capital? Right? What are your thoughts about the
So,
requirement of?
so I think that every startup needs to have everything good, but at least one thing outstanding.
Okay.
Right? Everything has to be good. So it's jack of all trades and master of at least one. Now, the problem is there are a lot of things. Let's say, for example, the burning desire of the entrepreneur to succeed.
Right.
Right? I would love for this to be the number one outstanding feature. Okay. Except that I don't have a thermometer I can shove into that guy's mouth which measures his burning desire.
Right.
Right? So what happens is that we tend to measure what we can measure.
Right.
One of the easiest things to measure is traction.
Sure.
Right? If, for instance, somebody came up with a remarkably innovative idea where it's right. technologically innovative, sure. and I can look at it and say, wow, this is intellectual property of the highest order. I wouldn't even think about traction. I wouldn't even think about co-founder team. I wouldn't think about whether he's incorporated or not. As in that could happen. So what we are all looking for is that great hook, which would the drive me towards that person. And unfortunately, that has always been biased towards traction because traction is easy to measure. Right. Now, traction itself has many measures within it, but traction is easy to measure. So that has been, and unfortunately, in the absence of other outstanding but measurable elements, traction will always remain king. Right. However, there are two things that take you away from it. Number one is the fact that indeed there are other factors than traction that potentially could make the startup exciting. And second thing is that as more and more money chases more and more opportunities, as in I'm not saying fewer and fewer opportunities, but these opportunities are not always open and available to everybody. As this happens, several people will have to make some compromises. Like they will say, you know what, this is not the most gold-plated opportunity I wanted, it's still a good opportunity. A silver-plated opportunity. I've never heard that term, but maybe. So there probably they could say, you know what, guy doesn't have traction, but we'll have it in 3-6 months, so I'm willing to take the bet. But barring these two things, there is an absence of opportunity or the presence of alternatives where I take a conviction, traction is going to remain quite important.
Very interesting. Ajit, I have a follow-on question, right? Which is like, I'm trying to sort of, understand the other side of the homogeneous environment that we're talking about, right? And you're proving it through traction, right? I think what is also going to happen that given that all of us are now essentially consuming from the same sources, what is also happening is that influence is gonna be very fast, right? I think there's so much of content which is getting produced, right? And I think this is something which is happening in a very unstructured way, which is user generated content, and there is also a lot of structured content which is getting designed to and calibrated to suit the audience which is out there, right? Do you think that this is going to risk the longevity of association between a certain product and the consumer while we talk about scale and traction?
Think about Facebook. And I'm saying think of Facebook in the absence of Instagram, in the absence of WhatsApp, etc. So everybody was on Facebook. Now it is probably true that everybody has an account, but several people who were very active on Facebook a decade ago or 5-6 years ago are much less active. Right? So while critical mass was more than achieved, while they introduced things like Facebook login, which definitely increases your association with the brand and the technology and stuff, but Facebook has, after a certain point, it's languishing. My children's generation, many of them are not on Facebook, and the ones who are there really think of this as something that their parents did. Right. So I think that you are right about the fact that it is likely to create longevity, but it is not the silver bullet. It is not the silver bullet because for whatever reason, with size comes a certain lethargy. Like I always say that why did Paytm or MobiKwik, etc. even get a chance to exist? Why did HDFC Bank not do it? Right. And HDFC Bank, by the way, did have a digital wallet. They had one, then they had another, and all of those kind of things. But still, along came Paytm, which is in the business of, in one of the businesses that HDFC Bank does, and has beaten them like completely overpoweringly.
Right.
So as you get homogenized and get bigger and bigger, you also tend to become more lethargic and don't find it as easy to move. This creates the path towards your eventual destruction.
Very interesting. Ajit, somebody said this, right? And I kind of, I kind of really like this particular line, right? And I've often quoted this as well. Is that a good team is your insurance for future uncertainties and unexpected competition, right? Uh, how do you view that when you are evaluating a team and the product and the space that they're in, right? Because
No, so very simply, uh, I will never disagree with somebody who says that I think that 2 plus 2 is 4. What do you think?
right,
As in, I'll say, yes, I have no choice but to agree. As
right,
in, if I were evaluating between investing in a good team and a bad team,
right,
I think that that's not a very fair question. As in, of course, the good team, right? As in,
no, okay,
who would say, no, I think a bad team is better, right? But what I'm saying is that you are right that a good team is some sort of an insurance. The entrepreneur's passion to be in the space causes them to tide over the fact that they are going through a bad period. The belief that the entrepreneur has
right.
helps them tide over bad periods. In that light, good team helps you tide over and becomes an insurance. I have to agree,
No,
right? But
okay.
I'm
So
just saying that what.
I didn't completely complete my I didn't complete my question, right? My question was, Ajit, and I'm choosing to sort of complete it now. Is that will skills be evaluated at a deeper level, right? I think the markets are a lot more sharper, right, than where we were. Around the time of the 2013s and the 14s and 15s of the world, right? Around those times. Today, we're in a very, very sharper, environment, right? Will skills be evaluated, at a deeper level? That's one. Second, how important is experience, right? While somebody is building something today, because it's now we're getting to a point of specialization, right? In certain streams, the models are looking challenging, tougher. What's your sense of that?
So whether it is Paytm, Ola, Free Charge, uh, come up with some of the other big names, Flipkart, etc. While the founders may have had some OYO rooms, have had some background or exposure or contact with what they did, but they were clearly not the gurus or the opinion leaders or the most expert in those fields,
Sure.
right? So I've seen that at least in the startup world, it is people who come from outside and disrupt.
Right.
It is because they don't know how to do the right thing, so they do their own thing, which beats the right thing. Because
Sure.
right was defined by as standard as opposed to really right.
Right.
So I think that having said that, maturity, perspective, wisdom, intelligence, emotional intelligence, these are all parts of one's personality, pretty
Right.
much like skills and experiences, and they're closely correlated. So that is always going to be valued. That is always going to be valued. Let's say somebody's interpersonal skills, leadership skills, ability to work with other people, it's going to be one of the biggest factors in the founder. So big that one could, start ignoring traction and focus on it, except that it cannot be measured.
Right.
Right. So I completely agree with the fact that skills, experience, etc. are always going to be valid. But what we count in experience? Is it that if you are setting up a fintech company, you should have worked in a bank for 20 years? Is that experience?
Right.
No, in fact, I would regard that as a negative, to be honest.
Okay. Very
Right?
interesting.
Yeah, I would regard that as a negative because I like this guy's going to have to unlearn so much.
Right.
Except if that guy was a misfit there and always saying that this is all nonsense, this has to be, and that is different, right? So I think that I skills, experience, 2 thumbs up, but definitions may change about what constitutes these.
Right. When I listen to you, I think there's a question that's coming to my mind. Do you think fads are going to fly faster?
Sorry, say that again.
I'm saying, do you think fads are going to fly faster?
What is a pad?
Fad.
I,
Fashionable. I'm saying fashionable stuff, right? Are fads going to fly faster?
I'm so
Do you
sorry.
think?
You're talking about fads. Okay, so I think that fad is a derogatory term.
I agree.
So I think
But
that if I were to instead say things that become very popular very fast without seeming underlying logic in a small section of the customer base, right? So sanitize that a little, so I think that the market allows you to do that. So tomorrow, if I want to, for example, create a Instagram campaign around edible flowers, that what you're eating, like in Hindi, for example, and several Indian languages, when we talk of food, we say, we don't say fruits and vegetables as we say in English. We say fal fool. Fal fool translates as fruit and flower. Right? But we don't eat flour. Somebody captures on that and creates an Instagram campaign around edible flowers. So that starts looking like the fad that you were talking about. Some people adopt it. Right? Some people adopt it and in their daily diet or weekly diet start eating flowers. Right? So this would be an example of that fad. So the interesting thing is that while on the one hand, technology is allowing for rapid scaling up and becoming huge giants, it's also doing the opposite. So there could be somebody who runs a business of selling edible flowers and makes like 1,000 rupees a day, right? And of profit. So maybe about 2,000-3,000 rupees of revenue, and a lot of it is going on Instagram ads and those kind of things. This also is now enabled. Earlier, if you would want to do this, you would have to be at certain scale. But now a smaller scale person can also say, I'll only do Instagram ads, which earlier could have been TikTok ads, for example, and make a small business which beats what I could make from salary, and probably capture on an underlying small movement which came up, which could be called a fad. So I think that,
I'll tell you what. So where I was coming from, when I said, will fads fly faster, is largely because, we are in a very integrated ecosystem now, right? Where discovery is very, very quick, right? And everybody's seen that video where there's this girl, and she's using a selfie camera and then she's doing something and then people are replicating it, right? What I essentially meant was that, is the pace of adoption of a fad define how certain businesses are going to be built in terms of, the kind of features that they can add on, in terms of, the ecosystem that they can provide beyond a certain point, right? That is essentially what I meant when I said,
I think there's merit. No, God, there's merit to what you're saying, and I must just, as a slight distraction, point out that I have a next call coming up. But that aside, I think the fact that adoption can be so fast and viral, the fact that communication is almost instant, the fact that communicating inorganically, so let's call it advertising or other forms of marketing, is now available for as low as like 100 rupees. It does not, you don't have to be a Procter and Gamble and hire the biggest ad agency and then go to the biggest TV channel. I think all of those things are allowing for more fads to come up, more depth to come into some of the fads, and fads actually becoming sustainable and maybe becoming mainstream and not remaining fads.
Interesting. Ajeet, given the paucity of time and, we're running out, my second last question to you is, given the momentum, and given the money, the way it's flowing in, right? Will the leaders get established very quickly? Also, that this is now becoming a transparent ecosystem, right? So are we going to see much faster rounds, much larger rounds in the Indian ecosystem?
So I gave very long answers for everything. Here, I'll just say, absolutely yes. The speed, the sheer velocity of all aspects of this ecosystem are increasing. Fundraises, successes, deaths, larger rounds, more development, more competition, regulatory climate, huge velocity increases coming up.
That is fantastic. It's good to hear that. Ajeet, any comments on the valuation bit, right? We've lived in an ecosystem which has been so essentially our roots came from a very traditional ecosystem, right? Where businesses were valued in terms of how we could view their cash flows, right? What was the certainty around the operations of that particular business, right? But now we are moving into a very different ecosystem where, the models will get defined at a later point, right? The engagement is the primary metric, right? It's already happening. It's going to happen all the more, right? What is your sense on valuations, right? I mean, are we seeing, a market trend where the valuations are going to be higher than what we've been seeing? Are they going to be improved?
I think that on the whole, literally take a market-wise average, I would only detect a little increase in valuation. But that is on the whole. What that on the whole or market aggregate will hide is that a caste system is emerging. Where there are people who are at the top of the food chain who would command extraordinarily high valuations, such as a pre-seed concept level valuation of 100 crores, right? Or about 15-16 million dollars. And this is not an arbitrary number. There is a founder who I am presently engaging with, and I am requesting him to please take some money from me because he has people queued up because of phenomenal successes in the past, and he has valued himself at 100 crores at, let's say, just the post idea stage or seed stage or whatever. So yes, so that is amazing, right? As in to hear that, one would never have imagined that a decade ago or even 5 years ago. So yes, there are going to be these extraordinary people sitting at top of the food chain who would get valuations as high as what you hear in the US or even higher, right? At least that window has opened up. Not too many people are passing through that window yet. So they are not necessarily affecting the broader aggregate, it is still, if the broader aggregate is higher, the broader aggregate is not dramatically higher, but there are pockets and flashes of real huge valuation growth that we are looking at.
Interesting. Ajeet, my last question, what's your advice to founders, right? I think, we've been a nation which has celebrated Jugaad, right? I personally come from a school of thought that, we lack deep thinkers, right? What's your advice to founders, right? Given that now we are in a very, very evolved ecosystem, a very transparent ecosystem, right? What is your advice to founders, right?
How so I think that Jugaad works beautifully. Jugaad works beautifully. Changes the probability of success from low numbers to very high numbers, brings results in a much faster fashion. Jugaad has some sort of challenge with growth, scale. That is the problem. So if you had a certain satisfaction level which was much lower than, let's say, the Silicon Valley archetypal entrepreneur would talk about, where $1 billion and unicorn and now decacorns, I think you could do Jugaad and be fairly happy. I would recommend that don't take investors along with you for that journey. Do Jugaad, as in don't even have investors, as in find a Jugaad around that also. So I don't have anything against Jugaad. I think that the largest majority of small businesses will come through Jugaad. Having said that, I do believe that I have yet to come across any advice which had like universal truth associated with it. So for example, effectively, what I'm saying is that my advice is to not take advice. As in, it starts sounding like I'm saying that, but then you know what? That would be my advice. As in, my advice would be to not take advice, which is my advice, right? So it becomes a little circularly negative. I would just say that listen to everything. However, don't follow anything. As in, have your mentors, advisors, incubators, accelerators, read what famous people have to say. Try to evaluate the context in which they might have said it. Right? Because a lot of them are very well-meaning. A lot of the advice is actually very good advice in a certain context. But frankly, follow your heart, because that is the one that is going to really cause your dramatic growth or downfall, regardless of whether you took other people's advice or not. So I would say be yourself. You have a lot to offer. Forget what sells and doesn't sell, because if you learn how to sell, it is a very temporary phenomenon. Right? When I say learn how to sell, as in, suppose somebody says, let's find the intersection of artificial intelligence and blockchain, because these are two hot fields. And you say, okay, I'm going to create a model around that only because I feel I'll be able to raise my seed round. Don't do that. Right? Be your own person. There's a lot that you have to offer.
Right. Be real, be, deep domain, have that understanding, of what you're building.
Keep it real, right? As is commonly said in the US. Yeah.
Right. No, Ajeet, I think it was fantastic talking to you. I have so many more questions. Unfortunately, we have limited time on the session, but, hopefully we'll have you with us soon. There are some of the other things that we've planned, and look forward to having you with us there.
Perfect. Thank you very much.
Thanks, Ajeet. Take care. Bye-bye.